668 Bitcoin went into this company. I'm going to tell you exactly what its investors are getting back. And not per Bitcoin, per share, the thing they actually own. About a quarter of 1 penny. Not a quarter of a pound, a quarter of a single penny per share. And the vote to make that happen, to sell every last coin and shut the whole thing down, passed with 9 out of 10 hands in the air, including some of the people who built it. Almost nobody is going to read the document that explains why, because the reason isn't in the headline. The reason is two numbers buried in the company's own filing. Two investors, the same coins, the same collapse. One of them walked out with 123 pounds for every 100 he put in. The other got back 24. Both are real. Both were legal. Both were written down in advance. I'm going to show you the sentence that separated them. If you saw what happened to Jack Mallers 3 days ago, the man who walked away from 43,000 Bitcoin, this is the same machine, one step further down the road. That one cracked. This one just got buried. And the way it got buried tells you everything about who these wrappers are really built for. I caught this the way I catch all of them. I keep the real Bitcoin and the paper versions of Bitcoin on one screen, side by side. And the gap between them is usually where the story is. I'll show you where that lives in a few minutes. So here's the company. It's called Satsuma Technology. Trades in London under the ticker SATS. And a year ago, it wasn't a Bitcoin company at all. It was a little artificial intelligence shell called Tau Alpha, the kind of tiny listed company that's mostly a stock ticker looking for a purpose. Then Bitcoin got hot, and it found one. It raised about 164 million pounds to buy Bitcoin. It hired one of the most respected voices in the entire space, Mark Moss, a man who has explained Bitcoin to more people than almost anyone alive, and gave him the title Chief Bitcoin Strategist. It bought north of 1,000 Bitcoin, and it printed one promise on the wall, the same promise every one of these companies makes. We will maximize the Bitcoin behind every share you own. This week, that same company voted to sell all 668 Bitcoin it had left, hand the cash back, and delete itself from the stock exchange. Now, every headline is going to say the same boring thing. Bitcoin Treasury company fails. And it's wrong, in the exact way the last one was wrong. The Bitcoin didn't fail. Bitcoin hit a 5-week high the same stretch of days this company was being put down. The coin went up. The company that held the coin went to zero. Same asset, opposite directions, again. The coin is never what breaks. The paper wrapped around the coin is what breaks. To see why, you have to understand what these people actually sold. And I want to be fair here, because it's genuinely clever. Picture a boat, a ship that holds one thing, Bitcoin. You want on the boat, but you don't want to buy Bitcoin and hold it yourself. Too scary. Keys, wallets, all of it. So the company sells you a ticket. The ticket is a share. And as long as everyone's excited, that ticket sells for more than the Bitcoin behind it. So the company sells more tickets, buys more Bitcoin, and everybody's slice grows. For about 2 years, on the biggest of these companies, that machine ran beautifully. Print a ticket, buy Bitcoin, repeat. But here's what nobody tells you when you buy the ticket. There are decks on this boat, and the people who got on first didn't buy the same ticket you did. This is the sentence I promised you. Watch the two numbers. The first money into Satsuma came in June, 5 million pounds. They converted at a price of 1/5 of 1 penny per share. And on top of that, they were handed roughly 1.5 billion bonus warrants, extra tickets, at that same rock bottom price. Good for years. That's the first deck. First class. Front of the boat. The big money came 38 days later, in July. 164 million pounds, 32 times as much cash. But they converted at a full penny a share, 5 times the price the early money paid. No 1.5 billion bonus tickets. 38 days later, 5 times the price, for the exact same Bitcoin on the exact same boat. Then the water came in. Bitcoin went through its ordinary down year, the company's stock fell below the value of the coins it held, and the whole thing was voted underwater. Here's what each deck walked away with. On the company's own numbers, the early money, first class, got back £123 for every 100 it put in. It made a profit on a company that just collapsed. The July money, everyone else, got back £24 for every 100. It lost three-quarters of everything. And this is the part that should stop you cold. Nobody stole that. There was no hack, no fraud, no villain twirling a mustache. The early insiders wrote themselves a better seat, and they disclosed it in a document in advance, the way it's always disclosed. The saver who came in later never read it, because the brochure didn't say, "You're in steerage." The brochure said, "Maximize Bitcoin per share." He thought he was buying Bitcoin. He was buying a ticket on a boat with decks, and his was below the waterline, and it was printed right there on the ticket the whole time. That live Bitcoin price I keep mentioning, the real coin, not a share price pretending to be the coin, is on my macro command center at timtalksfinance.com/members. Free account, no credit card, and it's the same screen I'm reading these off of. The whole point of it is to show you the coin by itself, with no boat around it. Now step back, because you have seen this shape before. A fixed pile of real value in the hold, an expanding stack of paper claims on it. The claims divided up by class, quietly, on a schedule written in advance, until the person at the back is holding something worth a quarter of a penny. You've lived inside this your whole adult life. It's the dollar. It's what turned a good 1970s salary into a joke. It is every wrapper ever sold. And this little company just ran the entire con in fast forward, in public, with the receipts posted on its own website. And Satsuma is not the weird exception. Roughly 40% of the 100 biggest Bitcoin treasury companies now trade for less than the Bitcoin they're holding. Jack Mallers' company, 43,000 Bitcoin, is one of them. Satsuma is just the first to go all the way to the end of that road, so you get to see what's actually there. It's not Bitcoin handed back to grateful investors. It's a forced sale, for cash, at the bottom, with the early insiders already up the gangway. Somebody's going to say, come on, it's just the price. Bitcoin's in the down year of its cycle, they bought high, that's the whole story. And look, Bitcoin did fall from its peak, and they did buy near the top. That part's fair. But run the numbers honestly. The Bitcoin itself fell by about half. The investors lost three-quarters, and at the end they don't even own Bitcoin. They own a cash refund. The coin fell by half and stayed a coin. The wrapper lost three-quarters and turned into pennies. That gap, between what the coin did and what the paper did, is the whole lesson. The down year didn't cause it. The down year just turned the lights on. Because the down year is the only time anybody finds out which one they actually own. So why couldn't they just fix it? They had every tool on Wall Street. And every single fix, issue more stock, do a merger, bolt on some other business, ends in the same place. Printing more claims on a pile of Bitcoin that cannot get any bigger. Because there are 21 million Bitcoin. That's it. That's the whole supply, forever. Not 21 million until the board votes. 21 million, fixed. No servers, only a protocol. No chairman, no chief Bitcoin strategist, nobody on earth with the authority to make coin number 21,000,001. And I want to say this plainly, because it matters. Mark Moss didn't get caught here because he doesn't understand Bitcoin. He understands 21 million better than almost anyone I could name. His own math on where a single Bitcoin ends up is part of why I do this channel. He didn't lose because he misjudged the coin. He lost because he wrapped it. The smartest Bitcoiner in the room still can't save you from the boat, because the flaw was never the Bitcoin. The flaw is the paper you bolt onto it. That's not a knock on the man, that's the whole point. And here is where it lands, so let me just say it. They are going to tokenize everything. Your house, your bonds, your savings, your stocks, all of it is being rebuilt on digital rails right now, in public, in the law. And you will be offered a beautiful, regulated, professionally run wrapper for every single one. A tokenized bond has an issuer. A tokenized house has a registry. A stablecoin has a company. A dollar has a printer. A Bitcoin Treasury company has a boat with decks and a board that can print more tickets while you sleep. Every exit they will ever hand you has a man attached who can make more of it. And it turns out, a first-class deck you weren't told about. Bitcoin, the actual coin, in your own custody, is the only one that doesn't. No issuer, no registry, no board, no fine print, no deck above you. 21 million. Fixed. Forever. 2 rooms full of sophisticated people and 164 million pounds just proved it the hard way. They had all that Bitcoin and every trick on Wall Street, and they still couldn't conjure one extra coin. That's not the bug they hit. That's the feature you're being offered. I don't deal in certainties here, only probabilities. Maybe the wrapper trade recovers, these companies get their premium back, and the machine runs forward again. Or maybe it doesn't. The discounts stay, and more of them get voted underwater while the Bitcoin sits in a vault the shareholders can't touch. I don't know which. Nobody does. But in both of those futures, the 21 million never moves. The wrapper is the variable. The Bitcoin is the constant. This week, the market told you which one it was pricing. The coin at a 5-week high, the company holding the coin voted down to a quarter of a penny. If you own Bitcoin through something, a share, a fund, a treasury company, a ticket, this was the week to find out what that little word through is costing you. I'm not telling you to do anything. That's just the math. And it's the same math whether Bitcoin is up next week or down. So do one thing. Look at whatever you own and ask the single question this whole story turns on. Is there a man who can make more of it? Free, no credit card, about 2 minutes. Take the money quiz at timtalksfinance.com/members. You'll see the live Bitcoin price on the same screen I use, what inflation is quietly costing your savings in real dollars a year, and one move worth thinking about for your situation. I built it because I got tired of finding this stuff buried in a filing at 6 in the morning, and you shouldn't have to dig it out alone. 668 Bitcoin went in, a quarter of a penny came out, and the coins were never what broke. 21 million. That's the entire argument. It always was.